The dollar has had a good couple of days. I think it can continue to gain, and the reason for that is that people remain extremely short the US dollar. Futures traders and other speculators haven't been this short the dollar since 2011. As well, we have the technical supporting a lower Euro USD and also a higher dollar index. And that's what we're going to talk about in today's market update. This is the Euro USD, and as I talked about before, I'm not showing you a chart of it, but if you look at the positioning of futures traders, they have not been this short since 2011. That's 10-year lows. So people are extremely short the US dollar, and usually when the positioning is so stretched, we tend to see a reversal. As well, you probably read my update maybe on FX Street not so long time ago, where I mentioned that pretty much all banks are predicting a lower dollar and stronger emerging market currencies. Well, not everyone, of course, but a majority. And usually when you have the professional investors being analysts being so biased, and then you have the institutional investors, things tend to go the other way. And we are starting to see as well, we're definitely seeing reversals here in the charts, right? And the EURUSD here on February 2nd, so that's yesterday, broke below the level here seen from January 18th, but also hit the level seen from December 9th. And this, there are different interpretations, but always when you take out a big level like that, you will have a test of the next major level, which is down here at 1875. But also as well, if you sort of focus on just this little segment here, that this section here is also a descending triangle. And that has suggests that the difference between this point and this point here is 139 pip. And that suggests we can trade it all the way down here to 119.07. Of course, we have the non-farm payrolls coming up by the end of the week, so it's no guarantee that it's going to be an easy ride. In fact, it's probably going to be a difficult ride. But the way this looks right now, I think we can continue to trade lower. And the general idea would have been to short here on 120.53 and then try to sell corrections towards that level. And I think people will continue to do so. Of course, the price is going up now a little bit, but ultimately I think we can go down. I traded not the Euro USD directly, but I traded the dollar versus the Swiss franc. Traded here already on February 1st because we have this inverse head and shoulders here. And I bought on the breakout, and I'm still holding, and it looks like we can go up to something like 90. This is 1993. Now, I said as well we're going to talk about the dollar index, so let's focus a bit on that one. So this is the dollar index, and you're looking at here, it's a bit like the dollar Swiss, which is a head, left, and a right shoulder. And depending on how you draw this one, because it's not as it's not easy to read as, for example, dollar Swiss. But if you would draw the levels like that, then you do have further push to the upside here in the dollar index. And this suggests really, there are different ways of working with stops, of course, but overall, as long as you're above 90.38, it sure looks like we can hit higher. And then you have sort of these lows here. As for the pattern itself, it suggests we can go up to 92.63. But obviously, I think maybe up to 92.09, and then we will need to see. There are a few other things as well. There are driving prices, and that is relative growth. Where we're seeing how Europe is struggling, and then we have the US actually holding up economically better there. So you have that relative growth as well. Financial conditions just in general in the US, because of the big stimulus they had, it's looking to put the US economy on track. Whereas if you look at financial conditions in Europe, you're not really seeing that improvement. Hence, economic activity is going to pick up much slower here than in the US. And that's another reason, because sometimes it's about relative interest rates. Sometimes it's about relative quantitative easing. But relative growth is also important. And that, again, suggests that we could see a stronger dollar. We'll see what happens. As always, always when I trade, I make sure I have not too much risk. Trading with, maximum 1.5% max loss per trade, sometimes up to 2%. And that's usually a good strategy because we never know. and obviously the year is young. Things might change dramatically as it did last year, so we never really know. But for now, it sure looks like the dollar is going to gain more in the next coming weeks and months. Thanks so much for watching. Don't forget to subscribe. If you have any questions, just leave them in the comment section. Thank you.